You've been learning about value investing, finance, just regular investment for a while now, but you don't know where to go next. You're getting confused about the vast amount of information on the internet. You don't want to waste your time on crap information. You want good information and reliable information. In this series of videos on value investing and finance education, you will find those answers to those questions and much more. My name is Jason Rivera. Welcome to Value Investing and Finance Education. Hey, Jason here. Today I want to do a quick case study for you on Kylie Jenner's Kylie Cosmetics company getting bought out. I want to do it live for you right now, and I haven't done this yet. I haven't done this case study yet, but I thought this would be a great real-world case study and example on how to value and evaluate a potential business from a valuation perspective. Is it overvalued? Is it undervalued? Who got a good deal here? Was it the company Cody who bought this company, or who's buying this company, or is it Kylie Jenner and her people? I'm going to go through that quick valuation, show you how to do it real quick in today's video. Okay, so I don't have Financial Times, but for some reason I can get into this article sometimes I can't. So if you are having problems getting into this article, which will be linked below this video, try again, I guess. Maybe go to incognito tab if you're on Chrome. I'm not really sure why sometimes I can get in articles on here and when sometimes I can't. So just try again, and if you want to look at the article and the kind of the source material, just keep trying. Okay, so Cody, public company, bought 51% of Kylie Jenner's company for $600 billion, which values the whole company about $1.2 billion. 51% at $600 million would equate, or would equal, or assume, I guess, that the other side of the business, the 49%, would be worth about another $600 million, which is where they get the $1.2 million total valuation from here. Okay. Deals closing later this year. 4-year-old company. Blah, blah, blah. Okay, here's the part where we can value the business. Okay, so just with this, what is this, one sentence, 2 sentences, we can value the entire business. See who got a good deal, see if Cody overpaid, all this kind of stuff from just this one thing. Again, yes, if you're doing an in-depth analysis, you want more information than this, but just a quick and dirty valuation, this is literally all the information you need. So the company is on track to reach $200 million in sales this year. It's growing at 40% annually, and the company has an EBITDA margin of more than 25%, according to Cody. So what this means is, again, I don't use EBITDA. This is pretty close to net income. I don't use the net income, which I talk about at length in several other videos, so I'm not going to talk about that here. But what this does tell us is we can get an operating margin estimate from this business. How so? Typically, companies' operating margins are 10 percentage points to 20 percentage points higher than their EBITDA margin. So if we go at the low range for conservatism's sake, we can estimate that Kylie Cosmetics has about a 35% operating margin. From there, with the sales, we can guess, or we can get a close estimate of its operating profit. 200 million times 35.35 equals 70 million. So 70 million, how I would value this company is, actually I'll show you how I value this company kind of from a public perspective, then tell you how it's different from a private company perspective. So most public companies I value in the 8x to 11x multiple range when it comes to operating profits. So at the low end, again, for conservatism's sake, I'd value this company. Oops. So hold on. Point 0.35 times 200 times, so 70 million times 8, about $560 million for the entire company. Even at the high end range though, times 11, which normally I save for companies with long-term competitive advantages, I get a valuation of about 770 million. So why is Cody paying well above what I estimate the company to be worth? There are several reasons. They state in this press release, excuse me, they state in this press release that they're going to use Kylie Jenner's access to her, I think it's 270 million plus social media subscribers to continue pumping this brand. So I don't value subscribers like that because most of those people don't buy, but obviously she's figured out a way to get them to buy. So that has an enormous amount of value. Her brand power, and again, other than the Kardashians themselves, I don't care one iota about. But from a business perspective, marketing perspective, they're pretty much geniuses. And this proves it because, again, by my estimates, between 560 and about $770 million for this company today, not including the 40% annual growth, because we can't, this is a brand new company, 4 years, we can't assume it's going to, at least when I do valuations, you can't assume that a company is going to continue growing at 40% per year. But that still holds some value to Cody, and the bigger thing here is the 270 plus million social media subscribers for Kylie Jenner and her company. So that's going to be what Cody says is their rationale for this purchase. Do I think they're overpaying at this point in time? Yes, I do. However, I think most companies over the last 8-10 years have overpaid for everything because for almost everything, because almost everything is overvalued. So Kylie Jenner and her family are making out very, very, very well in this. They're still going to have 49% of the company. They're still going to be able to control, again, according to this release, it could change over time, but they're going to continue to control the kind of brand and the image and the marketing, the Kardashian Jenner family. They're going to still continue to control all that. Again, according to this release, they're still going to control all of that while essentially making $600 million to give up 51% control, 51% stake in the company. So this company right now, based on this valuation, this is another thing we can figure out. Based on this valuation, divided by, so 1.2 billion divided by 70, operating profit, again, remember, that puts that at about 17.1x multiple to operating profit. I never buy companies that expensive, ever. However, again, this is slightly different because of the social media following and the high valuations worldwide on all assets, that kind of stuff. Again, would I pay this price? No. Do they think does Cody assume that they're going to make a lot of money? Sorry if you hear that in the background. The lawn guy a couple of houses down is mowing one of my neighbor's yards. Is Cody going to make a good return on their investment, in my opinion? In the short term, probably not even close. In the long term, possibly, if Kylie Jenner keeps growing this brand, would it be a good deal? Yes. But there's less margin of safety here because they are overpaying for this acquisition, in my opinion. And again, I like to keep things as simple as possible. If she dies the day after this deal closes, the brand is gone. So this is essentially, I mean, I know she has people helping her and creating this stuff, but she's the face of this brand and will continue being the face of this brand going forward. So if she dies the day after this deal closes later this year, Cody's in trouble. They essentially are going to probably have to write down either all or most of this investment overnight. So that's another huge risk you have to think about as well. Something else we can do with this, since we know that the multiple this is selling at is about a 17x multiple. Again, I already told you what I did. Most private companies sell between multiples of 2 and 6 times, depending, unless they're in the kind of high-tech arena, then they sell for maybe 10x multiple. So even at this high range of 17x, let's assume they are selling at a 10x multiple to operating profit. That would put the valuation about $700 million. So again, that just shows that they are most likely overpaying for this deal. Another thing we can do with this information is compare it to public company multiples in this arena. So we can go to Morningstar. Oops. See if this is the ticker. Okay, this is the company. Sorry, this is taking so long when I record a video. Sometimes the Morningstar takes forever to load up. There we go. Okay. So right now, what we can do is we can compare this. Oops. So I need that. And possibly this. Okay, for sure this. Income statement, no data available. Why is there no data available, Morningstar? There we go. Okay. So once this loads up, okay, we'll go back to that page. So this is a $9 billion company that bought Kylie Cosmetics for a $1.2 billion valuation. It's a $600 million company. What we can do here is figure out their trailing 12-month operating profit to see what multiple they're selling at right now. So 460 million. Oops, 9.1 rounded up. 0.1 divided by 460. So they're selling at a market cap to operating profit multiple of about 20, rounded up. So they're actually, if you, on a relative basis, using their cash, capital, stock, whatever, debt, whatever, at a 20x multiple what they're selling at today, to buy a company at a 17x multiple. So in this sense, you could say that they're buying an undervalued asset. Again, this is why you need to be careful with relative valuations, because relative valuations on almost all assets worldwide are insane right now. Do I think they're getting a good deal? Probably not. And if this is true, which I assume it is, then their operating margin is about 30 percentage points lower than Kylie Cosmetics. So that's not good for the company. So another thing we can do is kind of get an industry multiple. So we can compare these multiples to industry competitors to see what kind of the industry multiple is right now, to see if they're getting a good deal or whatever. So same thing here, $69 billion company. Okay, so 2 point, let's see, 69.37, 69.4, rounded up, divided by 2.7. So their Estee Lauder is actually selling at about a 25.4x operating profit multiple right now in the market. So they might be getting a good deal on Kylie Cosmetics based on these multiples. Again, though, the 17x multiple for a private company is insanely high. And there it leaves little margin for safety no matter what the public company multiples are. Because again, public company multiples on almost all assets right now are insanely high. So let's try one more. What's a Estee Lauder? Blah, 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 blah. This is the exact process I would do to evaluate any kind of deal. However, I only want the public companies. I don't want... Let's see. Let's see, L'Oreal, Revlon, let's see if those are public. L'Oreal is, let's go with the ADR. Okay, this company's even bigger. $159 billion company. So let us see what this multiple is. So 159.4. No data available. Okay, so I'm gonna have to, here's another way to do this. Oops. Let's go back and see if we can calculate it ourselves. I'll show you how to do that as well. Okay, so there's operating income right there. So we don't have to calculate it out. What you could have done is if this was blank, could have done 18.5% divided by, or times this to find this number. Okay, so 5, 2, 3, 4. So this is selling at about a 30 multiple. So again, the reason I look at multiple companies is to get an idea of what the multiples are in the industry. So according to this, the industry multiple is about somewhere in the 23 to 25 range. Market cap to operating profit multiple. So with, again, at the first I did a more of an intrinsic valuation to see what I thought of Kylie Cosmetics and got about between 560 to 770 million. Based on the relative valuation of the industry, it should be worth, let's see, let's go with a 23 multiple. So 23 times 7, oops, 23 times 70, you get about a $1.6 billion valuation. So at that rate, if that's how Cody is doing the valuation, they are saying they're getting a good deal based on public company multiples. However, private stocks are almost always cheaper on a multiple basis than public companies because there's less available information. So that's another area you need to be aware of as well. But in this video, we've now covered how to value the company, 2, 3, 4, 5, probably around 7 ways we've valued this company in how many minutes are we at? In 20 minutes. This is how, again, I look at any valuation, look at any company on the kind of preliminary basis. Again, yes, if the company would meet my criteria, I do more in-depth research, read the financial statements, look at the ratio, stuff like that. But here's a quick way to value a company about 7 ways in about 20 minutes. And we did it on an intrinsic basis, multiple ways, relative basis, compared to kind of public and private company valuations, relative basis compared to its industry competitors, and also a intrinsic valuation based on that kind of industry-wide multiple of around 23 times operating profit. So I hope you learned a ton. Let me know your comments, questions, concerns in the section below, in the comment section below. If you're watching on YouTube, make sure to like, love, share, subscribe, and hit the notification bell so you're notified anytime I release a new video. Love to hear your thoughts on this. Who do you think got the better deal? This was kind of split, actually, based on the relative valuation, the intrinsic valuation. Who do you think got the better deal? I'd love to hear that, your thoughts on that in the comments below. Thanks for watching. Until next time, have a great day. Talk soon. Bye.